Hi Team Value, JJ here, welcome back. Well, today I'm going to react to a recent video by financial education Jeremy. He's talking about small cap stocks and why their performance sucks at the moment. Now, small cap stocks are one of my favorite subjects because the majority of my portfolio is now small cap stocks. And the performance is going very well for the past year and year to date. So I'm going to have a difference of opinion here with Jeremy. Hi Jeremy, if you're watching, and I do hope you see this. Now, I don't mean any disrespect by having differences of opinion. Of course, we do have different opinions in investing. So let's see what those are.
What you're looking at here in front of you is a 3-year chart of the Russell 2000. It is down 14 percentage points in the last 3 years. This shows you the performance of the Russell 2000 so far this month. It is down 7.5%. It is far worse than the Dow, the S&P 500, or the NASDAQ.
Yes, let's have a closer look at that performance. We can see here that year to date, the Russell was actually down minus 3.2, and for the past year, 8.5%. So not doing so well. You can see these lines here against the S&P 500 and the NASDAQ not doing so well. So it's correct there that small cap, generally the index is not doing so well.
We have small cap stocks all over the place that have just been completely falling apart this year or doing very poorly compared to what the company's actually doing. You look at a stock like Fubo, down 55% year to date. Honest, which reported the best quarter the company reported in years, even despite that, that stock's down about 4 percentage points so far this year. You look at a stock like Avant, the company reported record Q1 net revenues and they beat their guidance, and that stock doesn't matter. They could have the cure for cancer and it still wouldn't matter. That stock's down 44% so far this year.
Now, I'm not going to talk about a specific small cap stock picks there, but I can say that it's not all small cap stocks. It is in general, as I said, that the Russell 2000 is definitely down for the year, trailing the other indices, but maybe it's in part to do with individual companies, as it always is. Warren Buffett has said he looks at individual companies. We can't look at all small cap stocks. We can't say that all large cap stocks are doing well at one time. It is always about individual companies. We do have to look on an individual basis. This is my small and mid cap portfolio. It's vast majority small caps. And as we can see here for year to date, it's up 29.71% just year to date, while the S&P 500 is up 5.9%. Although year to date is not a very long time, but Jeremy is talking about short term here as well. And this is for a year. Going back a year, my small cap portfolio is up 45.36% over that time, and the S&P 500 is up 21.40, so more than double the S&P 500. As I said, vast majority, it's 8 stocks in this portfolio, vast majority small caps. It isn't just due to 1 or 2 stocks, it is a range of these stocks. Clearly, there's something going on here. It's not all about, the market and all small caps going down. Unfortunately, I can't say what the stocks are here. I only reveal that on Patreon, which I have gone through the stock by stock portfolio, so Patreon members know that. I'll put a link in the description if you want to see that. And I can say that I do have at least one in the same sector as one of Jeremy's stocks there, which is performing much better than the one that he has there. So clearly it's partly about individual companies. Let's continue with Jeremy.
And yet you look at the big dog stocks and they are just performing tremendous. You got a stock like a Meta up 40% this year. You have a stock like Nvidia up 71% this year. Let's talk in depth about small cap stocks. I'm feeling very passionate about this here today. I think it makes sense.
Yeah, I like to talk about small cap stocks too. I'm glad that Jeremy's talking about it here because it's one of my favorite subjects. I don't talk about it very much on YouTube in particular because frankly, not that many people are interested, but I do talk about it, as I said, on Patreon. That's where I go through small caps. I talk about small caps a lot because mostly I do have small caps.
Stocks, let's be very crystal clear. They're in the depression state. I want to talk about why these stocks have sucked so bad, to just put it quite frankly to you guys, okay? We're going to talk about when will these stocks go beast again, and they will go beast again. I'll take you through the scenarios on how that happens, when that happens. And then we're going to talk about why I'm investing in some of these small caps. These small caps have held me back the last couple of years. If I would just have my money in the big dogs, I would be doing far better, right? Why not just have my money invested in Meta, Nvidia, the stuff that's working, right?
Not necessarily. As I said, my portfolio, small cap portfolio, is doing pretty well this year. Touch wood that it keeps going for the rest of the year. We'll have to see. There are catalysts involved that can be volatile.
Any more proof of how bad these stocks have performed? Look at a 3-year chart of the Russell versus S&P 500 and versus the NASDAQ. This is absolutely incredible. There's a 34 percentage point underperformance of the Russell versus the S&P 500 and a 40 percentage point underperformance of the Russell versus the NASDAQ. I looked back throughout data, okay, and throughout many, many decades. I could not find a 3-year span where the Russell's underperformed the S&P 500 by 34% and where it underperformed the NASDAQ 40% over a 3-year span. I couldn't find it. That is incredible. This is not normal.
I think that's correct. It's a very unusual period that we're going through here to be that far separated.
This is the furthest thing from normal. There's some reasons for this, right? Here's the first reason. Small caps are seen as more interest rate sensitive. Now, that's true in many ways. It's not true across the board. There are some situations where it's not, right? So when interest rates rise quite a bit, it's seen as hurting small caps more. And the reason being is small caps, if they have to take on debt, it's going to be at much higher rates, and small caps might pay a much bigger interest rate than, let's say, a large company would, right? And they might not have as much cash around as the big companies have, so they can't get that interest income like the big dogs can. Small caps are seen as handling inflation worse than large caps, right? Large cap companies may not register that much in terms of how much it negatively affects a large cap company. Small caps can feel it very heavily.
Well, I don't really have a problem with that. That's true. But again, on a case-by-case basis, there are sectors and companies that will not feel inflation and interest rates so much, or if they're in a good financial position, if they're not profitable, if there's, problems with the fundamentals of the company, of course, they're going to feel some of those things more, especially if it's unexpected. I mean, you look at Silicon Valley Bank, not a small cap, but these banks got surprised by the lift in interest rates, inflation. Had a lot of tech stocks, including small cap stocks, mid cap stocks, large cap stocks, got surprised by inflation and interest rates going up. They were high multiple stocks. Their share prices did get wiped out 70, 80, 90%. So as a stock picker, as an investor, we might want to think about how, changes in interest rates, and it's not even normal. Over the time, interest rates have been 7 or 8%, I think, historically over the long term. So shouldn't we think of, what if interest rates go up to that level at some point, rather than thinking that they never will? I think you've got to think these things through.
Inflation is still an issue. Factually, right? The Fed wants to see CPI around 2%. We're not there, and we're actually trending up, if anything, recently, right? And so we have still an inflation problem, which means we're higher for longer, which means all these negative effects of small caps are going to continue to be seen, at least in the short term, which is very different than the view was, let's say, 6 months ago, 12 months ago, when people thought inflation had been beaten and we'd be getting lower rates sooner rather than later. Now it's like, now people are talking about 0 cuts this year, 1 cut this year.
That's true. People were expecting cuts, up to 6 cuts a year. And as he said, it's gone down now. But should we, invest based on these macro events? I've made a few videos recently about people relying on macro, predicting the macro and investing based on that. I think that's a very bad idea for a stock returns to work out only if the macro situation goes well or changes in your favor the way that you think it's going to do. And I think Jeremy's going to talk more about this.
This is somewhat true as far as small caps, handling inflation worse than large caps, right? You look at, let's say, Honest versus a Procter & Gamble. They both sell very similar products. And you look at Honest in 2022 when inflation was out of control. When inflation was out of control, Honest stock tanked. It went down over 50% in 2022, right? Procter & Gamble, on the flip side, Procter & Gamble did decent. I mean, Procter & Gamble was only down 5% in 2022. That's a win.
Okay. But was that to do with, the macro environment? Was that to do with what he's talking about? Or was it also factors within each individual company? I mean, Procter & Gamble versus Honest, are those really comparable in terms of the fundamentals of the company?
Now, next up here, there's a viewpoint of safety in large caps over small caps. Now, I think a lot of this comes back to just human nature, just feeling better with large things than small things, right? I want to be with the big bank rather than the obscure bank that only has 2 locations. I'd rather be with the bank that is nationwide, right? Safety over with the large over small, right? And so that's how people feel. They feel like, okay, if there's a crash, if something bad happens, I'm gonna weather the storm better here than versus in this little thing right here. If I told everybody, hey, there's a big tornado coming, which house are you going to be in? 90% plus of people are going to choose this house. Like, it's just human nature, okay?
I think that's correct in terms of in stock investing, especially if people don't know how to analyze stocks, if they don't have a lot of experience or confidence in it, they'd much rather stick with those even mega caps, like Google or your Apple or maybe even Tesla, even that, well, that's gone down. It's incredibly volatile. It has been proven to be, still is. But, going into small caps, I think you do have to know what you're doing. That's the caveat here. So, there is safety in big proven, they're usually older companies, more mature companies than in the small, maybe unproven small caps. That's definitely true.
So it's not like this is for no reason. There are reasons why this has happened. So now let's talk about when these stocks are going to go beast, what the scenarios are, and then we'll get into why I'm investing in some of these smalls. So scenario number 1, there's 3 scenarios that could play out that would cause small caps to absolutely go on an epic run here, okay? The first one is if interest rates start to go down and there's no massive recession occurring, okay? So let's say the Fed does start lowering rates this summer, into the fall, and into the beginning of next year, and guess what? There's no major recession, right? Maybe growth isn't super strong, but there's no major recession. Well, that would be an environment that would be very conducive to small caps, especially if we could start seeing CPI simultaneously all in the 2s. With interest rates dropping and there's no major recession occurring, that would be a very Goldilocks scenario for small caps, and you would see those stocks go on an absolutely epic run in that scenario number 1.
Okay, so immediately in these scenarios that he's talking about, I can see he's getting into the macro environment again. So it's a what if this happened, what if? Well, what if it doesn't happen? Do you want to pick a company or choose a company that's going to perform when things don't go your way in terms of the macro like this? Because these are what ifs. I mean, they could happen, but it's about predicting the macro and having your small cap stocks perform based on that so far.
The second scenario is a scenario where big tech and large caps kind of get played out. So let's say the Metas, the Nvidias, those sorts of stocks report another great quarter, another great guidance. Those stocks go on a beast run. Let's say the Nvidia goes to 1,000 plus, 1,200, something like that. Let's say Meta goes 550, 600. And, let's say Google reports a great quarter, Microsoft, those sorts of stocks. But then there starts to be a view of those ones kind of getting played out a little bit. Maybe they push the valuation too much. Maybe growth is going to slow, something like that in the back half of the year. Then you could actually see some rotation of money coming out of some of those stocks and kind of rotating into the small caps, especially if scenario 1 is looking somewhat realistic. That would just add more fuel to the fire. If people started to feel like these are kind of played out and they start to rotate out of these in the back half of the year, right? Which is basically, let's just call it summer and after. And you get this sort of scenario, that's just kind of fuel for the fire there. So it's scenario number 2.
I could see that happening, although it may not happen. He's looking, say, a year out, saying if this happens, if that happens. Again, what if it doesn't happen? This is just one scenario, one prediction that may not come true. It's so hard to predict the macro correctly. You can't do it consistently. I mean, really, you want to have your company have returns that aren't based on the Goldilocks scenario in terms of macro.
Scenario number 3 is a scenario where the market starts to go major risk on, right? So right now we're kind of getting a correction in the market. It's going to be, especially if this keeps going, it'll be like a little mini correction. But let's say we get past that, and let's say we actually start to go risk on this market in 3Q 2024 through like the first quarter of 2025. And let's say things start playing out for us. Next thing you know, all of a sudden we see CPI in the 2s in the summer, somehow, some way. I don't know if that's going to happen, but let's say it happens, okay? And let's say the Fed starts talking really dovish, they get super dovish, and they actually start lowering rates. That could cause, especially if there's no recession, that could cause a scenario where people start wanting to go very risk on, right? And that's a scenario we actually saw play out in 3Q 2020 through the first quarter of 2021.
Okay, so that was a really unusual situation here. If risk on, meaning that that was really a bubble, an emerging tech that turned into a bubble scenario. So he seems to be saying here that, for small cap stocks, we get into that situation where there's a big rotation. We get into this Goldilocks macro environment. There's a big rotation to small stocks, and then small stocks take off into a bubble-like situation. If we look at the second half of 2020 and 2021, that's when ARK was taking off, went into that bubble. Although Kathy would have said it wasn't a bubble, it definitely was. EV stocks were involved in that, and look where all those are now over the last 5-year period. Even Tesla's down from that. It was part of that bubble, and now it's way down. So he's talking about this really ideal scenario, macro environment, and even a really frothy market. And there have been those predictions of a tech bull market, and like the dot-com bubble was, but relying on that for the performance of your small cap stocks, all of them, that seems kind of ridiculous to me. I'm sorry. Now, if you're getting value out of this episode so far, I'd really appreciate it if you remember to smash that like button to help the algorithm to spread it to more people, because that's what we want. Thanks.
We had that initial recovery, in the Rona, after the Rona crash, right? That really, kind of went on in the second quarter. But then that slowed down a bit, and then third quarter, fourth quarter, we saw kind of just a crazy kind of boom cycle there. Risk on assets went insane. Next thing you know, some of these stocks were 3xing, 5xing, 10xing in quick amounts of time. I mean, we're talking in the matter of months. And if you see something like that play out, then definitely people, are going to be piling in, because at the end of the day, when people see a lot of money being made, they pile in to where the money's being made. It's, once again, goes back to human nature, right? And so if a scenario like that played out, people chase smalls for performance in that sort of scenario, right?
This is crazy that, he's saying that it's going to rely on predicting this kind of bubble situation or really frothy market for small caps. We can't rely on that. What's going to happen if it doesn't happen? If it does happen, what's the downside, rather than thinking about what's this extreme upside? What's the downside? What if it doesn't happen? What if it just continues and we have a bear market? If the correction turns into a bear market, what then? Do we think about the downside as well, or do we just ignore that?
Why am I invested in these smalls? Why am I not just going all in, Meta, Nvidia, those sorts of stocks, right? These stocks have performed horrible. Some of my favorite stocks of the bunch are Fubo, which has been absolute trash as far as the stock performance. The company's metrics are getting better and better and better. Losses are coming down, revenue's going up, subscribers are going up, margins are getting better. Everything's going in the right direction for the company, but the stock price is absolute trash. No one wants to be in Fubo right now, right?
And I can't speak to his stock picks here. I can't speak to Fubo. I haven't looked at it properly, but again, I'm just wondering what the fundamentals of these companies are like individually.
I really like Avant. The stock's down 43%. This is the type of stock no one wants to be in right now, right? I like it. I like it a lot.
My small cap picks in this sector are doing the best, actually. They're in the US, in Canada, but same sector and incredibly different performance. I've had a very good performance from this sector.
Revolve, another small cap of mine. This one's doing decent this year, up 15%, but not up nearly as much as it could be, because right about here is where people started worrying more and more about, the Fed, they might not be done, right? Honest, this stock's, the company's fundamentals are the best they've been since it's been a public company. I'll just be quite honest with you guys.
But they've had problems. I've heard him talk about this before. They had real fundamental problems there. I think they've got a new CEO who's trying to turn things around. So it's like a turnaround, and they did not do well. So having heard him talk about this and go through some of the fundamentals, I wouldn't be investing in this company. Maybe it'll do well, maybe it won't. He knows more about it than me, but it's something that I think I'd be staying clear of this one.
And yet the stock has done nothing so far. I really like Honest. I think the Planet's in full-blown turnaround mode. Stock's only up 9% this year. Should be up a lot more than that, but once again, no one wants to play these stocks.
Again, same sector. That one's in the US. I know about that one. I think there are better companies in that sector. That's something I've gone through in my Patreon. I talk about the stocks that I have there in that sector, and I think there are better companies in that sector, but I haven't looked super deeply into it, but didn't want to go into that one.
So here's the deal, okay? Why am I invested in these sorts of stocks, right? Well, look at a stock like Fubo. Now, if you think about where people start to feel good about inflation data and where they start to feel like, you know what? The Fed's going to probably be lower, and people even start talking about the Fed lowering in the back half of 23, beginning of 24, right? And that really started around April of last year. And if you look at Fubo's performance over that time, the stock price went up 200 percentage points in about 9 months, about 8-9 months.
Based on a macro change, not the fundamentals of the company, right?
That's incredible. Honest, over that same period of time, went up about 73 percentage points, right? The moral of the story in regards to this is when people start feeling good about Fed cutting, people start to position into these sorts of stocks.
Okay, so he's talking about the catalyst of a macro again. So I think that it's good to look at for catalysts for individual sectors, individual stocks, companies, catalysts that might be coming along. But he's talking about a macro catalyst that may or may not happen. It really might not happen.
And they start to go beast mode, right? And anything that is positive from the company's angle is just seen as kind of like extra fuel for the fire to kind of pile into these sorts of stocks. When these stocks move, they freaking move. That's to the upside or the downside. We saw the downside this year, right? But we've also seen the upside. I mean, whether the stocks are going up 200% in like 8 months, 9 months, right? When momentum comes into these names, it is dramatic.
I do agree with that. Like small cap stocks can go up dramatically, partly because, there's not a lot of institutional money in there. There's not a lot of attention on there. Sometimes on the OTC market with low volume, so some big buyers can come in there and move the stock dramatically, but it can also move it down dramatically. That's definitely the case where you get quite a lot of volatility, and you have to be ready for that. If you're into small cap stocks and micro cap stocks, you have to be ready for that volatility that can go way up, way down really quickly.
My portfolio overall, I'm invested into a lot of very large companies. I own a lot of large caps. I'm very exposed to a lot of large caps. They're the type of stocks I really want to be in over the next 5-10 years, right? But let's be quite honest about my big dogs. They're not giving me a 3x to 10x opportunity over the next 1 to 2 years. They're just not. Is Meta gonna 3x over the next 1 to 2 years? No, I wish it would. That'd be awesome. It's not happening. As much as I love Tesla, is Tesla 3x into 10x over the next 1 to 2 years? No. Is Nike 3x into 10xing over the next 1 to 2 years? No. Is Amazon 3x into 10x over the next 1 to 2 years? No. They're great companies. They should produce me very good gains over the coming years, but they're not those sorts of return profiles, right? My small caps are that opportunity. They are that opportunity to make substantial amounts of money, like crazy money in a very short amount of time. And we got a glimpse of it. We got a glimpse of it last year when you watch those stocks go up hundreds of percent in a matter of weeks or months. There was like a little, hey, remember this can happen. That was that little phase there. And right now we're going through the other phase of like, hey, remember this can happen on the downside as well, right? So that's why I'm invested in these stocks. Like, because a lot of them I think have some pretty bright futures. And if things play out the way I think they can play out for these companies, the stock price is going to 5x, 10x in a short amount of time.
So I agree with that. These stocks can move up, as I said, really quickly and a lot, but they can maybe not as well. They're extremely volatile. If we're looking at 10x or more, 3 to 10x, that can happen quickly, but they can pull back again. It goes on the fundamentals of the company, not on this frothy market. What he's talking about here, if it's a frothy market, you might want to sell, or if you stayed in it as the companies grow, so these small caps can grow into mid caps and then maybe large caps. Very few companies get to $50 billion market cap. So, small caps, if we think about being under 5 billion, there are different people think of small caps in different sizes, but if they go from 500 million to 5 billion, that's definitely possible, but it could take 10 years, 15 years. If we think about 100x stocks, generally over time, they can take 20 years to do that, and 10x, they could take a similar amount. It depends on the company, how it grows. Again, he seems to be talking about relying on these macro factors, a frothy market, all the planets aligning to do this 3 to 10x in a short time, but it may not happen. I certainly wouldn't be relying on that in picking small cap stocks. I'd be going on the fundamentals of the company. Has the company got a bright future, a long runway for growth, good management, all the fundamental investing things that we look for rather than relying on the short term, because he is talking about short term here, factors that could propel the stock. Now, if you're watching this on YouTube, I'm going to put a link here to a video that YouTube thinks that you in particular should watch next. So go and see that now if you want to. And thanks to everybody for watching or listening, whichever platform you're doing that on. And I'll see you in the next one.